John Casmon is here from Casmon Capital.com. And John Casmon is all about apartment investing. He helps corporate professionals invest in multifamily, find the best markets, attract investors, raising capital, and building a strong personal brand. So it's like 10 or 12 jobs in one. And so if you're someone out there who says you want to know what makes successful people work as far as getting the people corralled and doing what you want and working with them and finding their relationships, opportunities, money management, drive, managing stress, all these other things. John Casmon is the guy we're going to speak to just about his real estate and business journey and what we can learn from him. So, Mr. John, great to see you.
Hey, Robert, thank you for having me, man. Excited to be here. And yeah, I mean, that's a lot. So obviously, when it comes to investing and trying to figure out your financial situation, there's a lot to undertake there, but we try to play a little role in helping people guide themselves on that journey.
Yeah, and everyone has to do it, right? It's so tempting to think like, okay, I'll just kind of skate by in life, but there really is no such thing, is there? Like you think, okay, I'll just get a 9 to 5, but there's not really job security, right? You might get fired and then you get arrogant and say, maybe I'll like start a business, but then there's other money hassles and you figure, well, if you ignore money, then it will just kind of go away from you, right? If you say, well, I won't take it seriously, won't plan for my future, taxes, savings, etc., then you'll be one of those people that's always struggling to get by. So it seems to be this kind of unfortunate fact of life. Like we have to learn these money skills and love money and pay it attention. And it seems like you figured out a few things, haven't you?
Well, I learned the hard way, right? So, I mean, my parents were, they're the generation before us, right? So they were the go to work, get a good job, work that job until you retire. And that was the approach. Unfortunately, I watched my father go on strike as a union worker. I watched my mother get laid off a couple times. So that changed that dynamic. And then myself, I went to college because that's what I was told you needed to do to get a good job. So I went to college, graduated, got a quote unquote good job working in advertising and marketing. And I watched the company I was with, pretty big company called General Motors, go into bankruptcy. And I watched that firsthand. And a lot of people who were lifers got let go. And I saw them scrambling after 20, 25 years, trying to figure out what in the heck to do with their life. And the reality is, as I started watching all that, I realized there's really only one way to take control. And it's not to let someone else make all those decisions for you. It's to figure out your own investing strategy. Yes, you need a job to make money, or you need some avenue or mechanism to make money, but you have to figure out where you put that money. And as you said, you can't just make money, stick it in a 401k and think that's enough. There are a lot of people who are retirement age now who don't have the funds to retire because those funds, those accounts, they didn't produce like they thought they would. So you need to be proactive. Real estate investing is one avenue to do that. And we help people who want to get all of the benefits of investing in real estate, but they don't have the desire or the time to be a landlord themselves. So that's really where we come in, and we recognize that was the missing gap. So we help other people invest in real estate through apartments.
Very nice. Well, there's so much I want to unpack there because there's the thing called the cash flow quadrant, right? Where they say basically like you have your day job and you have a little bit left over, and then you use that to kind of grow everything else instead of just kind of being in scarcity and hoarding money and hoping that it will outlast you. And then you hear so many good things about real estate, right? Because, well, if there's like stock market, it's manipulated, it goes up and down, or like other things you might invest in that can just like kind of fail just because, like, as you said, General Motors, right? You figured like decades ago, that was like one of the most stable companies you could think of, but then nothing in life is guaranteed. But then a lot of these real estate guys say, well, there will always be land, right? People will always need a place to live. And then you hear about like all the wrong ways to go about real estate. And like the kind of the cliche is like, oh, I'll just find that beat up house down the street and I'll just buy that one and I'll just rent it out. And then you hear about the disaster stories there, where if you have all your eggs in one basket, problem tenant, but then they say, well, hey, apartments, because then if there's like one vacant unit, that's okay. That's just like that one. And then from my limited understanding, there's like some kind of when there's like a lot of doors versus few, then like the math becomes like simpler or easier because there's just like more like systemization to be had. But hey, you're the expert. So you tell me, like, so as far as like real estate and apartments, you say that you do like the management and all that, but like what's that all about and why are apartments so great?
Well, first of all, you nailed it. For someone with limited knowledge, you sure did a great job of your research coming into this. And that's exactly it. And here's what I want to tell people: real estate is a great tool. That doesn't mean one strategy is right for you. You may realize, you know what, I would never want to do what John does, or I have no interest in that. And that's okay. We know that people have made millions in real estate for decades. Okay. So real estate works. You have to find the strategy that works for you. And the thing I like about real estate, unlike stocks, there's one way of doing it, right? You buy, you sell stocks. Certainly you can do calls and other things like that. But when it comes to stocks, it's still a primary. You're buying shares of a company, and then you're trying to time it when you sell those shares of a company. With real estate, though, you're buying a business. And this is the part that people miss. You're buying a business that happens to provide housing, but you have to run it like a business. And so many people, they don't. They treat it like a stock. They buy a property, they expect it to go up in value and just want to sell it at a certain point. They don't realize you have to actually manage this thing in the meantime. You can't just wait to sell it and hope it goes up. And where it gets frustrating for people is they run the numbers, but they maybe misinterpret or miscalculate the emotional stress and the emotional toll that it takes to operate these properties. You may have a tenant who's upset because something broke in her unit and you're not moving fast enough to get it fixed. You may have months where you're upside down and you actually lost money. Just last month, I spent $5,000 replacing water heaters at one of my properties. That was my whole cash flow for the month, gone just like that. Now it's just that month, and I have reserves because I know how to do this. But for a lot of other investors, whoa, that may have been their entire year's worth of profits. So you have to understand how to run the numbers and how to run it like a business, how to deal with tenants, how to get contractors and subcontractors. There are a lot of things. And for a lot of people, they realize they want the passive income, they want the capital that comes with it, but they don't want a second job. And if you are already a high earner, you're making good money, you're making six figures, you're busy during the day, you've got maybe family obligations or other passions that you're interested in, do you really want a second job? Probably not. And I learned that the hard way too. I had a property, I had a 3 unit building in Chicago, and this was my second investment property. I remember one of the tenants moved out, so I wanted to paint the unit. I got a quote from these painters. It was $700. I was like, you guys are crazy. I'm just going to do it myself. Well, guess what? When you factor in how to paint a unit properly, which is going in and, patching any holes, sanding it down, putting in a layer of primer, doing another sanding or coating, another layer of primer, then your first coat of paint, then a second coat of paint. By the time I was done, I had been there 7 hours. My family was at the park enjoying this Saturday because this is my one day off, right? And I'm here waiting on paint to dry. Literally, I'm sitting in the unit watching paint dry as I can apply the second unit. I'm like, this is not what I signed up for. This is not the passive income and the cash flow and all this stuff. And that's when I realized I was doing it wrong. So you do have to be smart and recognize you've got to take your time and value your time. If you don't really want to be a landlord, you don't really want to be the maintenance guy, find an avenue to invest like passive investing in syndications where you don't have to take on that responsibility.
Oh, very nice. So yeah, I like the going through the logic of what's the container around this, right? Because like you say, well, it's not just a flip or just an investment or treating like a stock market. It shouldn't be a job because if you calculate that time, that 7 hours you spent on a Saturday versus the money you got back, like you won't like the end result of that equation, will you? Be below minimum wage, but then treating it like a business seems to like set expectations a lot better, right? Because you kind of like when you hear about, okay, well, you own a business, you run a business, you like expect it to be hard, right? And you expect there to be obstacles, headaches, and then hopefully you think, well, it should also maybe be that we have other people involved and other people like doing the work, so that way it doesn't become this headache, and so that way maybe it's like less profit in the beginning but can like be more sustainable and repeatable. And so when you talk about these things like, passive income and syndication, like what does that mean?
So first of all, when we talk about passive investing, what we're really talking about is putting your money to work. And real estate, from a general standpoint, is not passive investing. Buying a rental is not passive investing because you then have to be the landlord. So when I say passive investing, what I'm talking about is after you write that check, do you have to do any other like work? Do you have to coordinate anything? Do you have to call subcontractors? Do you need to call the tenants? Do you need to do anything like that? If you do, that's work. So with what we do in syndications, what the way it works, we as the general partners, we go out and we find the properties, we underwrite the deal, we manage every aspect of the deal, we bring it to investors in our private network, and they have a chance to review it and decide whether or not they want to buy shares of this business or this investment that we're doing. If they say yes, they invest, they read the documents, they enter into this private agreement with us, with our securities documents, and then we go out, we buy the properties, and we manage it. And then we give updates on how the property is performing along with distributions. But there's no other work for those investors. So it truly is a passive investment opportunity. The other way, another popular way of investing passively is through lending. So some folks will do private lending. This could be one-on-one lending. This could be with a fund, which is what we do as well. So now you have a chance to say, okay, here are the kind of loans we're going to do. Do you want to be a part of this? Yes, you put up some money. And then we provide loans to flippers. They're the ones out there doing all the hard work, and we're just managing the deal. So it really comes down to your comfort level. Yes, there's more money if you want to be the hands-on person to do it yourself, but so many people miscalculate how much time and energy is involved. And if you make a mistake after putting in all that money, after putting in all that sweat equity, it can be absolutely like just crushing. And I've been on that side as well. We did a flip project early on and it did not go well. And I was busting my tail to not lose as much money. I wasn't going to make money. I wasn't going to break even. I was just trying to stop the bleeding. And that's never a great feeling. And it made me question everything about real estate, investing myself. And the one thing that that really helped me, and I had this conversation with another investor, he said, you have to think about investing as a game. And in any game, sports or board game, you may have a bad turn. You may, have to go directly to jail or not pass go or whatever it is, right? That doesn't mean you quit playing, right? You're still trying to win the game. So it's not that the game sucks and you flip it over and you leave, right? It's like, okay, that was a bad turn. And that's what investing is. It's not about the real estate. It's not about the syndication or that property. It's about your end game. Is it retirement? Is it, paying for college? Is it working less hours? Is it a beach home? Whatever you're investing for, that should be the focus. Everything else is just a tactic to help move you towards or closer to that goal. And if you think of it that way, you'll be less emotionally vested in the outcome of one specific investment or one specific turn. And that mindset has really helped me to stay locked in on the outcomes that I'm looking for while not putting so much energy into, each turn or each investment opportunity.
That's a wonderful mindset. I've never heard anything like that before. That's so helpful. And so you say that you kind of had these ups and downs, and it seems like with real estate guys, that's like built in, right? But maybe that's part of the adventure and the excitement as long as it leads to these good outcomes. And so you say that you kind of had these missteps, these headaches, these problems early on, and then now things are a lot better. Like, was there ever a point when you discovered something or you like changed direction?
I think when we've had our challenges, it's when and I say we, meaning my wife and I primarily, but it's when we've stopped believing in ourselves. Like I could look at I'll tell you that flip project I mentioned. I did a ton of research, read books, I talked to other investors, and I put together kind of a criteria for myself. And then I met a guy who was doing development deals. Now I had done a bunch of paper research, right, but I had never done it. And this guy was out there just buying properties and doing well. And I ended up partnering with him. And the deal we did together, it didn't match any of the criteria based on the research I had done or any of the conversations I had had previously. And lo and behold, that deal is the one that ended up going sour. And for me, it was a matter of just, you know what? I should have trusted the research. I was prepared. And when I tell people now, when it comes to our business, we raise capital. And I always tell people, listen, if you're going to raise capital for deals, you got to follow the 3 C's. That's confidence, credibility, and connections. And confidence is the first one. And it's not blind hubris. It's not faking it till you make it. It's real confidence from being prepared. Whether you've actually done it or not, you're prepared. And in that instance, I lost my confidence and I just gave it my trust to someone else. And I would implore you to always stay confident in your process. make sure you're doing your research. Make sure you feel prepared and comfortable. You recognize the outcomes, both good and bad. Where are there potential risks in this deal? How can you lose money? Make sure you're aware of those things and having that conversation so you can discuss the parameters. Okay, what would need to be true to lose money? Okay, if this were to happen, then what do we do? Like, you need to go through those things so you are prepared and you understand and you're comfortable with the decision. So that confidence is first one, credibility. What have you done in your past that gives you the credibility to go out and do this? Who else is around you? Do you have a team? Do you have credible folks who we believe can go out there and execute? In my life, I'd been in corporate America, but I had a lot of experience managing projects, managing teams. I oversaw a $100 million advertising campaign. I had 7 agency partners. I've won awards. So a lot of that kind of project management and people management skill that transfers over to real estate. And I started to build my own personal portfolio so I could share what I was doing there. So that built my credibility. Not to mention, I started to align myself with other more experienced operators. And then connections, right? You got to have people in your life. Who do you know? Who are you talking to? Friends, family. Extend that network. You've got to be able to build a network of people who believe in you and what you're doing and are willing to be a part of that. So nobody wants to be the only, right? I don't want to be the first person to invest in anything you do if I'm the only one investing in what you do, right? Like,
Right.
yes, they may want to invest, but it's a lot easier when you see 10, 12, 15 other people who also reviewed this opportunity and also agreed that, hey, this looks like a great opportunity. So make sure you're building those connections. And I think that helps tremendously.
Oh yeah, the three C's. That's so helpful. So there's preparing for the scenarios, and there's those transferable skills that have just come that you've accumulated from past jobs, career, including the people skills. And we always need to be making those new connections, including you and me, Mr. John. Right? We're just a couple of
Absolutely.
guys, and how the heck did we even get connected? We were just on LinkedIn, and we're always looking to do more podcasting, both you and me. And you never know what the connection ends up being, right? We see each other on social media, reshare. Maybe I know someone that knows someone. Maybe it's vice versa. It's just we always have to have that steady influx and kind of have the faith in the future and just be kind of preparing for what is to come versus the it's so tempting to backslide and just focus on like, well, the fires I have to put on out right now, but we have to have this more kind of abundance mindset that you're speaking about. And so you've done so much, you've seen so much, and there's a lot to talk about with you. But in this conversation we're having here, Mr. John, do you think there might be a missing question that I should be asking you? I just don't know to ask you.
Yeah, first of all, that's a phenomenal question. And the question that I always ask my investors to ask me, right? When I'm talking to a prospect and we get to the end of the conversation, they say, hey, okay, I think I know everything, or I'll say, hey, you know what? There's a question you should ask me that you didn't ask me. And you got to ask this. It's how can you lose money in real estate? And the reason I say that is it's a question on the back of everyone's mind, but they're usually uncomfortable to ask it directly. And I think it's really important to ask those direct questions when it's your money. I mean, our deals typically you're investing $50,000 or more. So it is not, just a stock you're going to put a couple $100 in and hope it goes well. So ask the tough questions because that's going to help you understand where there's potential risk that maybe you haven't seen. And for us, when it comes to any real estate investing deal, the first risk is cash flow. That deal I mentioned earlier where I was flipping it and said, hey, I was just trying not to stop the bleeding, trying not to lose more. Well, why? Because we weren't making any money. It was a flip. So there was zero cash flow coming in, lots of money going out every month. There was negative cash flow, right? So at a certain point, I can plan for some of that, but we only plan for that for 6 months. So after you get through that, past that 6 month window, I'm upside down with no more money in reserves to do this. Not to mention the project went over what I was budgeting for the cost. So cash flow, if you have a rental property, same thing. If you think you're going to make $200 a month, but boom, you got a big ticket item that you weren't planning for, that can wipe out your cash flow. So cash flow is always the number one way you can lose money. So make sure you understand how the property is cash flowing. Make sure you understand whether or not you have proper reserves, that you have proper insurance. So again, cash flow. Understand and ask deep questions about cash flow. Second is fraud, and this is uncomfortable. Obviously, there's going to be some bad actors. Anytime there's any way to make money, there's going to be some bad actors who are going to find loopholes and, cut corners and do some things that are, unfavorable to do that. So you got to make sure you watch out for fraud. What are your protections there, both as an investor, us, with operators. I've had people steal from me, contractors steal from me before. So you want to understand how you navigate and protect yourself against fraud. And then lastly is going to be from really things that are out of your control. So rising costs, insurance, natural disasters, things like that. So you want to understand, what insurance policies do you have? What coverages do you have? Don't go with the cut rate insurance, okay? Make sure you got the insurance to cover loss of business income. Make sure you have replacement costs, not replacement value. Why? It costs more to rebuild a property today than it did when the property was originally built. So I have a property, let's just say it's $100,000. A unit is what we paid for it. To build that same exact property today might cost me $175,000 a unit. Well, if that thing goes down, the bank is on, or the insurance is going to write me a check for $100,000 a unit if I have replacement value. So I don't need that. I want to rebuild. I want the replacement cost so I can actually rebuild the property based on today's cost. So get into the real questions, but the number one thing you can always ask is, how can I lose money?
Well, very nice. And as the subtext in our conversation is, it's all about asking questions, right? Because you can just get so lost in the sauce and be in student mode and analysis paralysis, but asking questions is powerful, right? It allows you to dig deep, and then there's like there has to be an answer to the question. So you're not just kind of procrastinating and saying, oh, well, I want to look into syndications or investing in apartments someday, and I'll just keep on learning. No, you say like, okay, well, what could go wrong? Or this, like you say, like, what's this difference between the insuring for the value or the rebuild cost, or like what people don't ask, like there's that value in asking the questions. And so the question I have for you, Mr. John, is about some next steps here, because we know that you're a multifamily real estate entrepreneur with 15 years marketing experience. You're host of the top rated podcast, Multifamily Insights, and you're a coach for active multifamily investors. So if someone says, this guy, John Casmon, I needed to be studying him, talking to him yesterday, where should someone go to find out more?
Yeah, I mean, go to our website. Go to casmoncapital.com. We have a couple resources. One of the great ones is 7 questions you must ask before investing in apartments. You can get that at casmoncapital.com/7questions. And from there on our website, we'll get you to, we have a free investor community. We've got some other resources available. Our podcast, as you mentioned, Multifamily Insights. We've done over 800 episodes there. So just check out the website, and there's a lot of great stuff there.
Very nice. CasmonCapital.com. That's CASMON Capital.com/7 questions to learn those 7 questions you must ask before investing in apartments, to uncover red flags, quickly identify underwriting risks, vet sponsors and team members, and confirm key assumptions. And as you said, on that website, you'll find the podcast, you'll find more of the contact information, mastermind coaching, and all those other resources there. So CasmonCapital.com is the place to take control of your financial future. There's these experienced team members that empower you to build a profitable multifamily portfolio, generating consistent cash flow and long-term wealth, so you can start your journey to financial freedom today. And as we're headed to CasmonCapital.com, it's time for the scary part of the show, Mr. John, where I try to stump you, I try to put you on the spot by asking about a fun or interesting quote or lesson that has served you. So what comes to mind as far as a fun or interesting quote or lesson?
Well, it's funny. I was just sharing this with someone else yesterday, different context completely. But the price of clarity is the risk of insult. And I love that. I read it in a book, and I've just absolutely loved it. I'm a person who, as you can probably tell from this conversation, I like to ask a lot of questions, and sometimes it annoys people because they feel like maybe I'm not trusting them, or maybe I don't believe in them, or whatever the case may be. But that's just not how my mind works. My mind is breaking down. One, gathering the information. I'm trying to understand what happened, why it happened. You know, is there something we can learn from this experience? How do we make sure it doesn't happen again? Do we need to change the process? Do you have the right people? Did you do your job right? Yes, that's part of it. But also more so, hey, did I not explain what I was looking to do properly? Maybe I wasn't clear. Maybe I was too vague. Maybe you don't understand this other thing that I've got going on, so you didn't realize why this was important for me to do it this way. Or maybe I didn't know you had something else to do in the afternoon. So I probably should have just said, hey, whenever you got time to get it done, and not, I ask a bunch of questions. And for a lot of people, again, if I ask you something simple like, hey, would you make me a sandwich? great. Hey, and if I ask you, hey, what kind of bread do you use, or what kind of this? It's like, do you not think I know how to make a sandwich? It's not that. Is I want to be really clear. Maybe I said sandwich, I was too vague. Now I'm trying to get clear. Like, no, I want a turkey sandwich. And I like my mayonnaise very lightly spread. I want a slice of cheese. So it's just being really, really clear. But again, that clarity, to get that, you do risk insulting the other person. So I love that quote, and it's just something I've come with. I've come to live by a little bit, just because I know if I really want to get clear, I'm gonna have to deal with the other side of that person feeling that way. So I apologize for it in advance and still ask all my questions.
Yeah, they call that sorry, not sorry.
Yeah,
And it's
yeah,
good to be informed. And it goes two ways, right? Because there's what you want to know, but also what you are expressing that you want to be done. So it's the price you pay. So let's think about that as we head to casmoncapital.com and find out how to build wealth and passive income with multifamily real estate. It's been such an education speaking with you today, Mr. John, and thank you for being here. I'm very grateful.
thank you for having me. Great conversation, and really excited to check out more conversations that you have here on the Market of the Day podcast.